What does it take to become a successful entrepreneur?
You have to be a little stupid and ignorant. Stupid's not the right word, but maybe a little crazy. You have to be willing to suffer. You have to be willing to be wrong and looking for where you're wrong. Insurance has been murdering NOI, and it's probably about to get a lot worse given what just happened in Florida and the Carolinas. Very, very sad. The rate of change and innovation is shocking. And we've been at the forefront of it. Humans will still need a place to live, and it will be physical, right? Even if we put on VR, and we'll still need a physical place for our bodies. So feeling good about multifamily. But the way it's built, deployed, managed, appraised, financed, insured, it's going to completely change.
Hello, everybody, and welcome back to another episode of Multifamily Chronicles. I'm your host, Adrian Danila. My guest today, another very special guest, is Blake. Welcome to the show, Blake.
It's a pleasure to be here. Thank you for having me.
I should say, Blake, your last name is Janover, and that is also your company name. So explain that to our audience, please.
Well, because I'm lazy. No, I think there's social accountability that comes with putting one's name on something. So if you're not sure if I'm all in, you could just look at the name of the company and there you have it. It's a show that I'm all the way in on this, on the business and everything around it.
I think you're absolutely right out there. You could only ruin your family name, nothing else.
Well, no, I could ruin more than that. I mean, I own more than 50% of the outstanding stocks, so I'm all in reputationally and financially.
And that's an amazing thing to put everything on a line, and I commend you for that. We don't see that often in a business environment. So, Blake, I want to go back into your journey a little bit before Janover. Tell us about how you got there from a professional standpoint. How did you start as an entrepreneur? That's my first question, first curiosity. What made you follow this road of entrepreneurship?
I suppose question of nature versus nurture. And I think in my case, it was both. My father was an entrepreneur when I was growing up. He had his own business. It was taught to me as a young age, not just entrepreneurship, but the kind of the principles that go around it, right? Which is hustle, creativity, frugality, doing more with less. And honestly, I think being the son of an Israeli immigrant, and then on my mother's side also that family having a background of entrepreneurship, I feel like it's both in the DNA and that I grew up around that. So in this way, you would consider yourself lucky to be an entrepreneur, which I think is a stretch. I think Elon Musk recently said it was like eating glass and staring into the abyss, or maybe staring into the abyss and eating glass. But I count myself quite lucky to grow up in this environment and to be born into that kind of family.
What role your heritage played into all of this? Like, your family being into entrepreneurship and, different perspective, also coming from a different country, starting from, scratch, I'm assuming in United States.
Yeah, so I started from scratch. My father started from scratch. My grandfather started from scratch. It's not a great thing, right? Nobody passed down some large amount of wealth between generations. I aim to change that. The role that my heritage played, there's this great book by Yuval Noah Harari. I think he and I diverge politically, but I think fundamentally he wrote this book about it was called Sapiens, and it's about like the big differentiator between humans and monkeys, besides, well, like a big differentiator is our ability to tell and believe stories. And the stories that I grew up around were the stories that I was told was of my my grandfather, who, was poor and he sold fruit on the street. He was like, buying fruit at one stand and selling it to another. And he builds a steel empire out of this. And I grew up hearing stories, from my father about his, struggle in the entrepreneurial journey, and stories about how my family um, had generations back had nothing and did these great things with zero resources. And um, these stories, that I heard growing up stayed with me, and they're stories that are still important to me today. And I find myself, wanting to compete a little bit with some of these wonderful role models of past. So it played a very big part.
I also see this as a competitive advantage. Am I saying this wrong? Am I wrong in assuming that it was a competitive advantage for you, like, starting from scratch, having these role models in your life?
Yeah, it's an unfair advantage. It's an unfair advantage, except for I had to work, struggle, suffer, lose, go broke, cry, and everything in between. So I'm very, very lucky to have been born into the family I was born into, and to be born into the opportunities that I was born into. But at the same time, part of the ethos was, man works, and suffering is part of the journey. So I had a disproportionate amount of exposure to struggle and suffer and work from a young age, and I've I've been quite lucky along the way.
In preparation of our conversation, I listened to a previous podcast that you've been a guest of, and you shared over there on a podcast that you had to file for bankruptcy once.
Yes.
Oh, and uh, I want you to share with us as much as you could share. How did that feel, and then how did you overcome that situation? It wasn't an easy thing for you.
Yeah. No, not an easy thing. How did it feel? Well, it felt terrible. I think I was in my early 20s, and it was hard to understand. I It was a significant loss. Financial security was gone, and I think the most painful part was having to fire all of my friends, because at that age, in my early 20s, who did I know to hire? It's like the guys I went to high school with, the guys I went to college with, my best buds. So I hired them, managed them, and fired them, and that was tough, and it was humbling, but not humbling enough for somebody that is as unbelievably stubborn and arrogant as I was. I hope I'm less stubborn and less arrogant, though my wife tells me I'm still a lot to handle. And then what was the second part of the question? How did I get through it?
Yeah, how did you overcome?
Yeah, so I think that all that credit goes to those stories that we were talking about, and to my father. My father used to tell me, the measure of a man isn't how he performs when times are easy, it's how he performs when his back is against the wall. Now, it just so happens that I spent 20 years of a career, a lot of that time with my back against the wall. And, one has to wonder, is that subconsciously designed, or just the luck of the draw? But either way, I think one of my strengths is my ability to work through the suffering and the pain, and focus. And maybe it's a weakness, actually. I don't know, but um, I have the capacity to get punched in the face over and over again, and continue on. So, um, if you just look at the outcome today, it's pretty good. But if you track the journey, it's high highs and low lows, for sure.
As an entrepreneur currently, right, the way you see yourself today, what's your risk tolerance when it comes to making business decisions? Are you considering yourself a risk taker, risk adverse, somewhere like in between, a good blend of both, like, 50-50?
So I think I think for somebody outside, they might look at me and say, this guy is a huge risk taker. That's what I think. If I had to guess, I look like a big risk taker. I consider myself extremely risk averse, and the outcomes will be what they'll be, and they'll be measured over decades. But I hope, or at least that's the plan. Yeah, I have on my desk, I've got like a bust of Warren Buffett and Charlie Munger. That's Charlie over here. I've got Munger. I've got Buffett next to him, and these guys, they may be the product of randomness or what have you, but and I'm not comparing myself to them. They're role models. They're the products of highly concentrated bets. So when I look at my big bets, it's I like hoard opportunity and cash. And when I believe that the odds are stacked in my favor, based on the information, on the data that I have, I kind of put most of the chips in on it. And right now most of my chips are in my company, Janover, and it looks like, and if you look at a chart from the last 12 months from when it traded, it's down like 90% or 80%, something absurd. And that's the short-term movements of a stock, and that is what it is. And I think our market cap over here was maybe like 50 something $million, and now it's like 8. The thing is that 4 years before that it was 0. So I consider myself risk averse, but willing to make meaningful, concentrated bets when I see the odds stacked in my favor.
Blake, what led you to start your current company?
So when I started this company, like right before it, I said, I'm never going to start another company again. So there was a combination of solving for a problem I experienced when I was raising money as a GP for a multifamily development deal. So that conceptually, it came from that and some other history. And then I would say like the two real driving factors were my wife. I had just gotten married, and my sister saying like, come on, Blake, you can do more. And a friend of mine who kind of turned into a mentor that shared some other perspectives with me about life, business, leadership, growth. And he kind of inspired me. So there was a push from two ends, and an idea and some sort of alchemy, and back off to the races.
If you were to look back many years ago when you first started as an entrepreneur, what are the top pieces of advice that you would give your younger self as an entrepreneur?
Be patient, and that urgency and patience can coexist, can operate with urgency while still being patient. I was never patient. Everything compounds. So I would also pick up some biographies on Buffett and Munger and learn about compound interest, and teach myself that it's not just financial assets that compound, it's relationships, reputation, where you are geographically. All of these things can have a compounding nature. And I spend so much time bouncing around. I'm doing this, I'm doing that. I'm moving. I'm living here. I'm living there. Oh, okay. One more lesson. So the first one was patience. The second one was compounding, and the third one would have been to think much, much bigger. If the goal was size or impact oriented, I think I would be much farther along on that path had I just removed all the limits I'd set for myself and thought and planned for much, much bigger things.
What does it take to become a successful entrepreneur?
You have to be a little stupid and ignorant. Stupid's not the right word, but maybe a little crazy. You have to be willing to suffer. You have to be willing to be wrong and looking for where you're wrong. takes decisiveness, takes a lot of humility and a lot of stubbornness. When everybody tells you you're doing something stupid or it doesn't make sense, you want to take the information and determine, is it right? Because everybody that's giving advice has like all of these biases. So you have to try to peel out the bias and get to the facts and see, am I doing the wrong thing or am I doing the right thing? And this is just another data point. But for me, it just took, I'm very curious. I'm always learning. I always have been. I always will be. I'm a learner. I could just get knocked down 1,000 times and get back up. I don't want to get knocked down anymore. So I gave you a lot of stuff there. I'm just I'm just reflecting on my journey and thinking, of the things. It takes good luck. There's plenty of people that perhaps have higher IQs or EQs than me that applied their intellect and their grit and didn't have a good outcome. So great outcomes aren't necessarily derivative of great decisions. It's like a little bit of a survivorship bias, right? So don't take me too seriously because I could just be lucky and all my advice, could just be, meaningless, and it's correlation, not causation. I feel quite lucky. Yeah. I went off topic a little bit. I apologize.
No worries. I'd like to ask you about your current company, Janover.
Sure.
What do you guys do? What's your main line of business?
Fundamentally, we're connecting the commercial real estate industry, the multifamily and commercial real estate industry. And we do it through 3 primary verticals and 1 new one. So the verticals are debt, equity, and insurance. For debt, we provide kind of like bespoke capital markets advisory, capital markets, commercial mortgage brokerage, however you want to paint that. And then when we were building that business, we ended up building a back end where more than 10% of the banks in America give us their data. 1,000 other commercial real estate lenders give us their data. These are the kinds of deals we do. This is our contact information. These are different people in different markets. And we built our own back end software. And we just started licensing that out. So now sponsors or commercial mortgage brokers, competitors can come to us and they could license. They could just go use our back end and our data. So we offer that as subscriptions. That's debt. On equity, we own Groundbreaker, which is an investor portal. So it's where GPs can have an investor login and LPs can log in, look at the deal, analyze the deal, review the PPM, sign docs, send money, get distributions, get K1s, track a deal over time. And in that platform, we just launched Engage, which is so the first one is groundbreaker.co. The second one is engage.janover.co. And we're going to start tying this all together in easier URLs. But that's an equity marketplace where really high quality GPs can get introduced to new LPs, accredited investors only, and new accredited investors can find deals to invest in. And that's been that's only been live for a few weeks as of the time we're having this conversation. And that's been really, really successful by, my measurement. The third vertical is insurance. And as you know, I think there was a lot of talk about, well, interest rates soared and that turned debt service coverage ratios inside out and made it really hard to make deals pencil. But insurance has been murdering NOI, and it's probably about to get a lot worse given what just happened in Florida and the Carolinas. It's very, very sad. And so we're working on applying our marketplace model to the insurance industry. We've been working mostly on, large, $300,000, $400,000 plus premiums, applying it there, and we're working through that. And then the last thing I'll say is that we've built really fabulous conversational AI that works over the phone, text, chat, email in the multifamily and commercial real estate industry. And we've started licensing that out. So we're talking to large property managers, large professional service firms to augment their inbound sales and service and some of their outbound. And so that's been going well. But broadly, we're connecting commercial real estate through technology and relationships.
How much of this process is automated? In other words, if I'm an investor looking to invest in some real estate deals and I'm on your platform. If I'm someone looking for capital and I'm looking for some investors, how much of
Yeah.
that process is automated? Like, am I like filling out some form and then your platform directs me to like a certain number of possible partners, or is just like we get your information and then we pass it on to like possible matches? How does that work?
Yeah, so it depends on where you are in the platform. If you're a borrower looking for debt, if you're a GP looking for LPs, if you're an LP looking for GPs. But my short answer to that question is we make the technology part as painless and seamless as possible. So either you're having conversation with AI that feels, very authentic, or you're doing the basics in a form, and we introduce humans in the process. So that we don't sacrifice the good feeling, the connection, and the conversation that's often required in a large or complicated transaction. So my answer to that question, when you look through any of our old filings, it's always about the best of technology with a human touch. And we're always thinking about how to best balance that given all of the resources that we do or don't have.
Blake, how do you see AI transforming the real estate sector in the next 5 to 10 years?
It's a crazy question. I don't know what it's going to look like in 6 months. The rate of change and innovation is shocking. And we've been at the forefront of it at the conversational side, I would say near the forefront, all other kind of adjacencies, but LLMs have birthed. It's funny. They're essentially predictive models, and they've birthed an unpredictable outcome. 5 to 10 years in real estate, humans will still need a place to live, and it will be physical, right? Even if we put on VR, and we'll still need a physical place for our bodies. So feeling good about multifamily, but the way it's built, deployed, managed, appraised, financed, insured, it's going to completely change. I have no idea what it's going to look like. I just know that we're going to be there. To the extent humans are still allowed to roam the earth and play in business, we'll be at the front end of whatever it's doing.
How do you foresee AI impacting risk assessment and underwriting in real estate in general and in multifamily in particular?
It depends. So risk assessment and modeling are looking at like a range of possible outcomes over a range of probabilities, and AI and contemplating data and the way data interplays against other layers and layers and layers of data. And AI is really, really good for that. Some kind of equilibrium will be found, but the challenge will be, what does it look like taking out factors that are kind of, what's the word I'm looking for? Discriminatory. So, it's a challenge. I think there's this one tech startup. Let's not mention names, but they, did really well with student loans, like the top Ivy League schools in the country. That's what they modeled for. That model is like very explicitly, maybe implicitly, whatever, exclusionary of, certain groups of people who didn't get their, really good student loans. So, I don't know. I think it's way more complicated. I think it's very complicated on how to assign appropriate weights and remove appropriate factors, and we'll see.
What would you say is the level of bias that you have encountered in using AI tools, like the AI bias? You just mentioned, there's some situation right there, when it comes to student loans, like a specific situation that you're just aware of. Generally speaking, how much bias an AI has?
I've seen it refuse to answer political questions. I've heard stories, so I don't know if this is real. So, but I've heard stories and seen videos of bias towards certain candidates and against others. That's scary. But hey, it already exists in media and social media. I haven't seen specific bias in our work, but a lot of work that we're doing is kind of top of funnel, middle funnel, conversational decision making along a sales or service cycle, or answering questions that have to query complex sets of unstructured language, right? It's less likely to become apparent in the work that we're doing. But I believe it's out there, and I believe it's like something that we have to be very cognizant of, right? These biases that become built into or inherent in these models.
I think it's fairly common knowledge that search engines, most of them, they're available, even the largest one, they really have biases. They're really not showing organic results. They're showing the results from behind the scenes. They want for us to see. And then if I was like to sit right next to you, and I will do a Google search, let's just say Google, right? Because it's the largest still engine in the world. I'll do a Google search on a certain term, and you'll do your own search on the same term. Results could look like significantly different. I believe that that could really apply to AI too, and it's the way it's being built. The foundation is being built. If it's being built with a certain bias, I'm gonna say, as my personal opinion, I think that it's always built with a bias. Nobody could be like 100% neutral. We all have likes and dislikes or opinions, and when we build something, that's gonna reflect into the products that we build, if it's such a product as an AI. Do you disagree?
I think it's a good point. When I think about Google, it's a different kind of bias. So for me, the bias in Google is an incentive bias. So Google makes money on engagement, and the primary form of engagement is a click. So it's inherently incentivized to build echo chambers and to polarize people. So if I like Donald Trump or Kamala Harris, and I click and spend time on those pages, then those are the pages that I'm more likely to see, the things that support my candidate of choice or attack the other side. And as humans, I think we're prone to excitement. So the thing that gets us most worked up, negatively or positively, and it's often negatively, is the thing that's most likely to get a click, and it's the thing that reinforces our existing biases. And so I think that's, I think if you put a Democrat and a Republican next to each other, and they're on Google, and they're on the same IP address in the same office, and they search for news, one of them is going to get a bunch of things that, like, Trump's amazing and everyone's trying to kill him, and then the other one's going to be like, Kamala is amazing, and Trump orchestrated January 6th, whatever. So I agree with you, and I think it's like different biases in different places. But yes, we're getting torn apart. We can feel it in the country. It's sad.
It's a very difficult situation. The social media platforms are following the same thing, right?
Absolutely.
These echo chambers, and it just amplifies whatever situation is. It amplifies it, right? You only talk to your own people that kind of like, you're preaching to the choir, and you're not really exposed to opinions of on the other end of the spectrum. I don't think that's healthy, really. I think we humans could be like reasonable if you want to be. It's just that we're, especially for those of us that are too much into consumption, social media consumption, like, it's very, very easy to get manipulated and get sucked into this black hole that, like, it's hard to get out of. And you're just surrounded by by people that have the exact same opinions. There's no nuances out there. And then when you go out in the world and you see other people disagreeing with you, typically the tendency is to, like, to react in a very negative way. And I think that really creates all the bad stuff that we're facing in society right now. And this, like, discord, we're not looking for the final ground anymore. We're always looking for our tribes, and that's where we're searching comfort, and instead, like, looking for the middle ground. I think if you're gonna ask a person that's like left leaning or right leaning, you're going to ask them, would you like to raise your kids? Would you like to give them the best education? Would you like for them to, grow up in a safe place? Would you like clean water, clean air? I don't think that a single person will tell you that they don't want any of that, right? So there's just so much common ground. It's just how do we implement? How do we get there? How do we find what unites us versus what separates us?
Yeah, I agree. Our decisions are being made at the fringes, and it's terrible.
What advice would you give to real estate professionals looking to adopt AI in their operations and decision-making process?
Decision making is easy. Take any of the models. ChatGPT is probably the best one. Pay the $20 a month and get use the most expensive model, and have it open on your screen. And every time you want to ask Google something, ask GPT first, and that'll get you kind of like trained in collaborating, right? And it could be anything from evaluating a deal, finding the flaws in it, uploading a file, looking at this document, drafting a document, tax strategy, whatever. You still want to, it's a probabilistic model. So you still kind of want to check the work before you make a decision, but it's really good. It's really, really impressive. How could they implement AI in the business? I could just, sit with ChatGPT and ask it, right? So things that, for me, for, commercial mortgage professionals, I would tell them that they should use J Pro, which is Janover Pro, right? AI is fundamentally capable of doing any task that requires a conversation. Like that can all be built. However special you think you are at sales or service or talking, AI is really approaching the ability to be able to do a lot of these functions. So if you have property management, like you don't need any human on chat. You really don't. And you could probably have one or some very small amount of humans available for escalations, but AI can really handle inbound over the phone, email, chat, all these things, lease abstractions, deal analysis. There's so much. Brainstorm sessions, right? And do it with GPT-4, and it'll help you scope it out, because it's going to be different for each person depending on where you are in the business. But the capabilities are just fabulous, and they seem to be moving just vertically really fast.
Blake, you've been involved throughout your career in multifamily real estate, a significant part, I would say. What are some challenges and opportunities that you see in a current environment in multifamily?
Challenges and opportunities are the same. So there's this great Ryan Holiday book, The Obstacle is the Way. I think that's like a Marcus Aurelius quote. It could be Seneca, Marcus Aurelius maybe. Everywhere where it seems like there's a lot of pain is generally where the opportunity is. Being able to assess the risk, understand the risk, and that when you think odds are stacked highly in your favor, to make that concentrated bet, to make that move. Even if everybody's saying, like, let's say it's office, right? Everybody's saying, stay away from office is over. Maybe, but there's this really nice building here in this suburban environment that's got really high occupancy, and all the tenants seem to be there, and the cap rate is like 500 basis points wider than the rest of the market. So it depends. And you were talking about multifamily, and I'm talking about office. So I apologize. It's just an example that stands out. There's going to be a lot of people that are suffering, sadly, unfortunately, from insurance premiums that could go up another 100, 200, 300% again, and it sucks for the GP that's in that deal. But maybe it's an opportunity for the next guy to come in and buy it for really cheap, and put on the new roof and do the new impact glass, and throw it into a captive or something. So the opportunities historically are generally where the tragedy and the pain is.
What advice would you give first-time real estate investors, especially investors that are targeting multifamily? They want to invest in multifamily for the first time. They don't know where to start. What are some pieces of advice that you have for them?
If the idea is to be a GP where you're like buying, syndicating, and raising money, then the first place I would start is investing as an LP in some deals, some small amount, so that you can track the process, read all the documents, read all the models, ask 1,000 questions, and really come to understand it. Underwrite 100 deals to do one, which sounds painful, but pain's kind of part of the journey. And then after you've been an LP and you kind of have an understanding, then I would find a GP partner and do it with a partner once. This is like a really good way to de-risk and to learn. There's I'm going to destroy his last name. It's Alex Cherbanesky. I got that wrong, but I'll share the link with you. He does good writing for LPs for deal analysis. There's lots of platforms out there where you can find deals to look at just to start to understand deals. There's Engage, which is ours, engage.janover.co. There's Realty Mogul, CrowdStreet, Yield Street. You don't necessarily have to invest in anything, but it's where you could start looking, right? So you don't have to reinvent the wheel. There's so much information out there. It just starts with an open mind and a lot of curiosity and some hard work and patience.
When it's time to look behind, just kind of draw the line and say, this was it for me. What type of legacy would you like to leave behind? What would you like your legacy to be?
Happy, curious, healthy children that are self-reflective and feel good about themselves. Financially, like a 20% CAGR for my shareholders. But the children question is that's the answer.
Yeah, definitely. Children are legacy. Looking into your crystal ball, 2025, 2026, what are some things that you're anticipating to see in a real estate environment in general?
I'll roll the dice. I'll say that office isn't dead. I think there'll be a return to office. Everybody says there's going to be a soft landing. I'll be surprised if it's soft, but I'm not an economist. So you're just asking me to make predictions. So I think there's a return to office. There'll still be pain in the B and C spaces in urban cores, but that ought to work itself out as they get repriced and rented out at different prices. So I think there'll be some kind of stabilization in office. I think there'll be a harder landing, recession and everything else. Lowered short-term interest rates does not necessarily drive longer-term interest rates, and therefore does not necessarily drive cap rate compression. So I think we could certainly see short-term interest rates fall and long-term interest rates rise, or at least stay stable. That's a normal environment. We've at least historically. I would see that. Some of the pain in CLOs ought to bleed out over the next 12 months, and deals will hit the market. We'll see how they trade on the multifamily side. And I don't know how it manifests itself, but it seems like unless something unbelievable happens, it seems like there's more pain ahead in insurance premiums. Multifamily, coastal multifamily, it's kind of bleeding out across or bleeding throughout the country, but certainly Florida, certainly coastal Florida, the coastal Carolinas, coastal Texas. I think there's more pain coming there, and breaks my heart. You could have a great GP, a great LP, a deal that's been modeled through a million sensitivities. It's hard to model premiums doubling every year for years, and not just premiums doubling, but deductibles shooting up. So you're just kind of fundamentally self-insuring and paying unbelievable amounts of money to do so. So I think there's more pain there, coming, unfortunately. And I think for every piece of pain, there's the other side of it. The counterbalance is opportunity. A 2021 vintage debt fund or 2022, you're as an LP, you might not be doing great, or as a GP, you might not be doing great. But conversely, I think anybody that was in a 2024 vintage debt fund did great. Anybody that was in a 2023, 2024 fund that was able to do mezz and preferred equity for equity yield, is going to have good outcomes. So, there's a lot going on over the next 24 months.
Like, amazing conversation. It's been really good having you on today.
Thank you. Thank you for having me. Thank you for letting me drone on and pontificate. I enjoy that very much.
Look, I want you to be you. I want all of my guests to be themselves, to feel as comfortable as possible to be themselves. Any final thoughts for me, for the audience, before we wrap up?
Yeah, keep listening to Adrian. You put on a great show. I think the quality of a conversation is derivative of the quality of the questions asked, and I think you asked great questions, and I hope that my answers were useful, and thank you so much for having me.
Thank you very much for your kind words, and once again, thank you for being with us today, Blake. I hope to get you back here at some point down the road, hopefully within a few months, because I had so many other questions I wanted to ask, but due to time constraints, I had to hope for the second episode.
Let's see if your listeners like it and request it, and maybe we'll do that.
Great point. I think they will. Thank you again for being with us today, everybody. Thank you for watching another Multifamily Chronicles episode. We hope to see you back here soon today. Have an amazing day.